Okay guys, welcome to today's video, and today we're going to be talking about understanding the story that price tells, right? And we'll be looking at this in a directional bias way, right? If you want to understand the story of a price, it means you want to really understand the market structure of the price, right? I discovered this is a problem traders have lots of the time that usually affect bias in general terms, right? So if you really understand that as price moves, right, there is a story, right, smart money is telling, right, and that story tells us which direction, right, it tells us how to view price movement, it tells us which directions a price wants to take, right, how the market structure reveals itself. So I will just be using chart examples to actually tell you how to understand this, and if you can use it, it's going to give you an edge. Like I tell you, it works, right? It works if you spend time to actually, you calm down, you open a particular new pair, not new pair per se, a pair that has price action. This does not work for new tokens that got listed. No, I'm talking of pairs that have large large price data. So with this, you'll be able to understand uh, the story that price tells when it is moving, right? So it's just for like a clarity, it's just to give you clarity of what let me say it's an advanced market structure technique that gives you clarity understanding the story of price movement, because the market structure tells us the behavior of the market. It means the market movers actually have a behavior, they have a pattern in which they move, the pattern in which they buy, a pattern in which they sell, and those patterns are being repeated all over and all over again. And now it's that repetition we dwell in, right? If there's if price action does not repeat itself, we do not have any strategy. Okay, it means every day there'll just be a new technique. We don't have a strategy, right? The reason why we're trading SMC, because those patterns repeat over and over again. They do not play out 100% of the time, but at least if we can get 60, 70, 80% of the way they play out and we understand it, and anytime we see it, irrespective of whether they failed the previous time, we still trade it and build our edge in order to perfect our eyes to see it more often. Okay, so understanding the story of price, we can tell that in two ways. Basically, I've explained this before, so I'll just be doing an advanced explanation. I've talked about it when I was talking about looking for directional bias. Okay, then I told you guys that there are actually two ways in order for you to catch directional bias: using key levels, right? Key levels are higher time frame support and resistance region, and using trend lines, right? Trend lines based on a higher time frame, right? So if we follow those two structures, it means for we to understand the story that price is making. Now, this is not for catching entries, this is just for understand directional bias, so that you know that, oh, you can be trading like this, but the momentum of price, right, you can trade both ways, but you know that, oh, on a long time bias, this is where price is going. So you now know how to focus your entries so that you don't have unrealistic long targets. Because you see price make a major move, you will feel that, oh, this guy is going to all-time low, or this guy is going to all-time high. So we don't have such expectation. We just trade according to structures we see, right, understanding the story that it tells, right? So if we, and we do this basically from higher time frame, from monthly to weekly, based on what. So I'll be using this CUSDT chart. So the first thing we want to do is, let me type this down, is to look at what key levels. Key levels, so it's very important. Key levels, high time frame key levels. Of course, you have no business with lower time frame when you're looking for direction. Okay, then we have the trend lines, right? Trend lines. So combining these two, we give us, right, trend lines. Combining these two together, understanding and using two of them as a confluence, right, would give us the story that price actually tells us. So let's look at this. So I'll be looking at this. No much data. I think this data is from 2023 on this chart. So if you look at the CU chart from here, we have I just want to sketch, if I can sketch this out, something like this. Okay, we have price moving like this, right? It made a low back, right? Then we have a push up, Okay, price coming back to this range, and there is a push like this. Alright, so far this is what we've gotten, something like this. Right, so if we were to look at this in an aspect, okay, yeah, this is a bit low, okay, and this, right, okay, good. So now I said, understanding the story, you need to look at the chart in a form of key level and a form of trend line, right? Combining the two of them together to get the story. So key levels are higher time frame resistant regions, right, where price bounce off and on from, right? It means anywhere price, if you guys know, I think we've talked about resistance and support. If you have a resistance example, let me just give that brief explanation for those that did not catch it. Say this is a resistance, right? Resistance supply zone, right? And say this is a support level, right? Demand. Okay, so you know if price moves, say price is coming from this region and creates a bounce off a supply, bounce off the resistance, price can continue bouncing like this to range till finally there is a break, right? If there is a break, price can now use this what for previous resistance and act as support to either push price back, price can still come back, take out this support, tap on this region and still act as resistance, right, to push price back to the support. Now breaks in this support, price can still break it back again, come back, say use it as demand and continue like this, right? It means if you see areas like this on the chart, when price will break, come back, retest it, move on, it means these areas are key levels that price always reacts from. You mean to you got to see price moving like this off these particular levels. Those are key levels, right? So that's what we want to identify. So from this pattern here, if I say you should identify key levels, you might want to pick, okay, there's a particular key level here, and you say, okay, price bounce off this region. There's a particular key level here also, because you have bounce selling from here, breaking it out, coming back to tap in and use it as support. It was resistant here to push price here, tap into this region, price broke out of it, so this particular area now turns what resistance, that was resistant before, but since there was a breakout, it turns support, push price back up, price coming back down to that area is still forming a support push. So we can also draw this again as a key level here. So this is marking out key levels. Now if we want to use trend lines, we would say, oh, price is coming all the way from here, and we'll mark something like this as the trend line. I say, okay, this is the bullish trend line. So you can see how the two confluences, right? So this will tell you the story. Let's go to live chart and let me check out these diagrams, and let's go to live chart. So we look at what this guy has been doing. So you can see this level where price was coming from, right? I can mark this area as a key level, right? Now price reached this region, and I can also mark this area as a key level, right? You have price bouncing from this till this guy pushed price back into the support level, the previous support level, all the way here. From this previous support level, you saw price tapping into the resistance, right? Now you can see there was a tiny bit of a resistance when price came into this zone. Then all of a sudden you saw price moving all the way. Now understanding the story, this is how you read the story, right? Then price broke out aggressively on this time frame. Now price came back down. This guy that acted as resistance before, now there was a breakout, price came back down to this same region, and this guy acted as what? Support to push price up, right? Price now formed a new resistance level here. If you look at it, when price came all the way from this region, it pushed down before the breakout, then broke down. So at this particular region, price got a resistance, right? This place that pushed price up, when there was a breakout, price tapped into this support, went back to this guy, resisted and pushed back down to the support, pushed back again to the resistance now, and you can see price pushing back down to lower regions. Is it going to come to this support level? You do not know. this way you now combine it. Right now on this weekly time frame, we have gotten support, key levels. This guy is a key level, this guy is a key level, this guy is also a key level, right? So now if I say draw the weekly trend line based on this move, you can say, okay, market moved from here and tapped here a resistance, and this region a resistance. You can want to mark something like this. Okay, you might want to mark something like this on this time frame, right? But let's go to the lower time frame. Let's go to daily time frame so that we can see more areas. Remember, when I was teaching you guys how to mark out key levels, I say you can mark out key levels on different time frame. It helps, right? Weekly time frame, we have seen all these guys now, all these block are weekly resistance, weekly key levels, right? But within the weekly, inside the weekly key level range, right, market can also create the daily range, daily key levels. This means an area on the daily time frame where price always bounce off and on from, right? And areas from the daily time frame where price also bounce off and up from that. That bounce usually pushes market to either the weekly key level zones or the monthly key level zones, right? So if you look at this area, when price moved all the way here, we saw a push back down before market moved up. When price moved all the way here, we saw price moving back up, coming back down to tap this region there, we saw an aggressive move. So, and also if you look at this, so there's also a daily mid-range key level right here resting on this guy, right? Now this does not give you assurance that you want to take a trade. No, you are marking this to understand the story that price is telling. Now not every trader would not every professional trader would show you how to do these things, right? But these are what we do on the background. Then we just come out and we enter into a trade, and you see the trade SMC setup, we catch the SMC setup, it will just go well. Why? Because we have marked out key levels on our charts. It might I might, if I want to post a trade, I don't need to post my chart showing key levels. You understand? I can analyze key levels on another chart and go and take my entries on another chart, because I just need to have identified the areas, right? I just need to have identified the areas where those things are, right? So it helps. Now you can see here's a key level. Imagine how market, now for people who do not mark this area as a key level, when market is buying, say from here, they'll be expecting market to just go ahead all the way, create new highs. But you identifying this guy before even this price action happened, you know that, oh, this is a key level on this time frame, and that you have seen on the weekly time frame, right? That push price from one weekly key level to another, right? It means if market is coming by, this guy will definitely act at a form of resistance. There will be a reaction at least before even a break, since it's coming from a weekly level. Now remember, we marked this from a weekly level, right? This one is the daily range we picked. So you can see market reacting. Even this one, before it got broke, you saw that 2 weeks market was bearish before the breakout occurred. Coming back aggressively on that region, it acted as support, push price back. So this is a clean story. It means before price will go higher or lower, there would be a breakout from this key level. You would not see that if you do not mark it. You will not understand. You just see that, oh, this guy bought from here now, right? We're supposed to see new highs, right? If you're looking at it just with the entry method mode without looking at key levels, you'll be like, okay, market just came down here. You'll be expecting market to just go all the way from here, right? Let me do this. You'll be expecting market to just move all the way from here and do new highs, because what, it has retraced. But no, on a higher time frame, there is key level resistant region. Market sold aggressively from this guy to this guy. It means if market is reaching this region, it will also resist price, right? Till if there's a breakout, you now wait for a retest, then a continuation, right? So this is how to identify it. Now you see that if you test this on different time frames, different charts, remember SMC setup, it's good for beautiful entries. We get catch precision entries, but I'm telling you, the back end of the secret behind catching those moves is confirming directional bias, and you do that with higher time frame key levels and trend line. It is very important. I don't need to start screenshotting this and posting it if I want to catch a beautiful SMC setup. No, I just I do this when I'm carrying out the analysis. I just do the analysis and I know that, oh, this guy is marked is coming from a key level low. And what happened? It tapped into a weekly key level, and on the daily time frame we saw a beautiful shift in structure here. So now I'm combining what? My directional bias, right? My key level directional bias to my SMC liquidity concept. So that's why I said, remember when I was explaining SMC, I told you guys the major thing is what? The first thing you want to know is understanding market structure, then you know how to pick liquidity, you know how to spot for liquidity, and picking a good point of interest for your trade that is very close to liquidity. All those ones there. But now, after you understand market structure, while understanding it, you must know the directional bias, and these are the key ways to identify them. I've explained it in the past and I'm still doing it now, so that you guys would not be overwhelmed with catching perfect SMC setups without knowing exactly high time frame regions where market is bouncing from, that is causing sometimes your SMC setup not to even flow. Why? Because you might have seen a beautiful setup right here. Say you want to catch a beautiful setup all the way here that will just take out maybe an SMC setup here, right? You see it, but because you know that there's a key level, there's a weekly key level here that has pushed price down. Even if you're catching an SMC setup, immediately is getting to say the key level regions, you secure your trade, right? Because you know that there might be an aggressive sell-off here, till when you now get a confirmation, a daily body close above that region, you now know that, okay, I can now continue catching my sweet SMC setup, right? The idea is just to identify where those guys are, identify where those key levels are, so that you do not trade and enter them, right? You do not forget yourself and trade and enter those levels. For example, say of course there was a beautiful trade here, right? Say because you have you've marked out this key level and you caught a beautiful SMC setup from this imbalance and you're targeting all the way, right? Most people would want to target, since price has retraced, they want to just target here, all-time high. That, oh, this guy is going to all-time high. Can he go there? Yes, of course it can, but the idea is knowing that there is something here. I think I've mentioned before, I don't think it was on space on Twitter, that do not overlook any supply zone or any demand zone. What does that mean? Any area, let me draw a demand zone here. Any area that has acted, right, as a zone that has made an impulsive move either to the downside or to the upside, right? I'm going to take that. I don't need that. Any area that's acted as zones that have taken market to the up or the downside should not be just neglected. You must understand the structure there, so that you don't just wait for market to say market wants to invalidate it. You must know how to secure your trade, because you don't actually know what exactly want to happen at that region, especially if, say, this region might have taken out liquidity and is now protected. Even if the structure is, say, the structure is bullish and market wants to, especially if it's the first move, for example, first reversal move. Let me give you an example. I think that just happened on SU today, right? You remember yesterday we were saying if SU is to go bullish, would need SU to at least close above this region with a body candle, so that we know that the last high that gave us a low would be taken out. So it will be a clear structure like this, right? It will be a clear market structure shift. We'll now enter for a pullback and continue, right? So at this moment now, as long as that shift is not here, you need to still respect any. Just imagine where market acted from today. Look at the daily imbalance. Immediately market was moving. So now you're catching bullish trades. right? You know on the daily time frame, on lower time frame, the structure is bullish. Of course, you'd be respecting the trend line and be trading along with it, right? Which is not wrong. Let me draw that. You'll be respecting the trend line right here and be trading along with it. But you know that, oh, there's not been a confirmation on the daily time frame that we have taken out this high. So it means I will be very, very careful whenever I'm trading with any of these supply zones, because they've acted as a region that push price down. So there would be resistance there, right, for any buys. If you go to 4 hours time frame now, you see that structure clearly, right? You can see the trend line that has been pushing market on this smaller time frame, right, to those zones. And you can see how angry markets gets when it's this is just the bearish order flow right here, and that's what market just tapped into, and you can see the aggressive movement. What does this tell me? It means if I catch a buy setup here, which of course there was one, you can see the buy setup here. If you go to say 4 hour time frame or 1 hour time frame, you see that buy setup, right? Liquidity is here, engineered, and beautiful entry, right? You can see that. So if you have been following Sue or Sue, you can see the buy setup, right? So there's a clean buy setup here on this imbalance. So what does this mean? It means if I'm buying from this region and I catch a buy setup, right, even though the structure I've been trading from is bullish, I would want to be very careful with the supply zone. Why? Because my daily time frame has not actually broken structure and be free. It's not yet free. There's nobody candle on that structure, right? Till when your daily candle goes above here like this and there's not a breakout, it means I don't need to even care about what's happening on the left hand side anymore. I'll just be taking my entries with full chest, right? Because what the story price is telling me that I've broken out from that resistance, I just want to retest it and I'm free, right? So this now tells me that, oh, I would need to be very, very careful that I'm trading this range. And since you can even see how market is moving, right, very slowly, it's moving bullishly on this range, but very slowly. So it means if I catch a buy setup, I'll just target any liquidity close to the highs and I'm out. If I catch anyone on this range, I'll target liquidity close to the and I'm out. But now on this particular one, now someone has caught this trade on this time frame, immediately price is even getting to regions of this, right, to the regions of filling this, right, or even 50% of this imbalance, you will close and take profit. Why? Because of course you've caught a beautiful movement all the way from here to here. That's enough for the day. Then you wait for more price action. It means price should tap into this box and react. If it breaks out, it will give you confirmation, but you don't want to be trapped and you don't want to even sell because you want to still wait for a confirmation. Let this structure shift so that you know that, guy, if you see maybe a close below this region and a breakout of this trend line, you know that maybe price does something like this. We don't know what it wants to do, right? I'm just saying, if you see a shift, something like this, you know that, oh, I'm going to enter for a pullback and we're taking out all the liquidities on this trend line. But if that does not happen, you see market breaking out of this order flow, then you know that once the bearish order flow is taken out, we'll keep creating bullish one and keep going higher, right? So this is what I just want to talk about today. Understanding those things. You are if you're using TradingView, you have access to open like if you see USDT, you can open different charts on different exchanges, right? That you can use one of those charts to save it, use one of those charts to understand the story, right? You mark out all these key levels, right? Then use another chart to mark out the trend lines. You combine them, see, so that then you use another chart to catch the entries, especially where you'll be trading on any platform you're using, right? So they now know that, oh, on this zone there's a key level here, I don't want to trade around that region. On this zone there's a key level here, there's a break of structure, price can come lower, it has tapped into key level. That's why all the buys happening here is just so slow, right? Let me take this out. That's why all the buy is happening here if I zoom out and I'm looking at the structure, look at when this guy was moving bullish, then all the buys happening is so slow. What does it tell me? Does it mean that this price is telling me that, oh, there are more price action on lower levels and I'm still having some imbalance here that's not been filled or it's not been mitigated? Does it telling me that you want to understand the story so that you now know that, oh guy, if I'm taking an entry, I want to take a very precise entry and have a precise exit so that market does not go ahead of you, right? So I don't want this video to be too long, right? So if you understand a bit of just what I've said, test it out yourself. It's easy to mark key levels. It must not be perfect, so you don't need to select there. You just need to select areas, right? How did I mark this key level? Let me show you in simple terms. When market made a sell from here and made a low, it stopped here, then we saw an aggressive movement, the market broke out. This buy that market took out, right, that market took out, you saw when market took it out, it came back to retest, then we saw that continuation. The market was creating order flow, and buys. So if market break out, a secret, right, you can use order flows to trade very well. If market break out from a particular key level and just imagine if you are traded SU, there was a breakout from this guy, so the dump was aggressive, but when market pulled back, it was creating order flow. This is a beautiful sell. Market pull back to the order flow, another sell to the downside. Market pull back, another sell. You just be catching it till market shift structure, right? Shift structure continues, right? So for the demand now, the key level, right? This, once it had happened twice, then you saw market broken out from this place. We tested it, came back down. You draw that place as a key level. Market came back into this key level from here, could not go higher. All of a sudden, you are looking at it. It did not use. Now, if you look at this structure, there was no like what made market to push down from here. It's not as if there was the good order block. It even swept it, right? If you say okay, if you say this is an order block, a demand zone, it took it out, right? So what market was actually respecting here was not even this demand zone, supply zone per se. It was respecting this area of resistance. That's why you see immediately swept it. You can see it resisted this region and pushed all the way down, came back to this same region of demand, which is another key level all the way, right? It did not even react on the 50% level of this. It came all the way, tapped into this demand zone, right? Is that my network? I just have my network bailing on me, right? So if you want to understand this thing perfectly, just pick out 30 minutes, 1 hour of your time, and go to any chart of your choice that has lots of data, not new charts. Then just go to weekly time frame, start marking out those levels. Use different colors, right, to mark out those levels so that you understand what price has been doing. It will just give you a guideline, right? And it gives you that confidence that, oh, if guy has marked from this, right, this guy rejected all the way from this, and you are seeing a structure shift, I can be catching sales. For example, look at this, right? Let's look at this based on structure. Market tapped into this level and it moved down, right? Now most traders, because of this daily imbalance, they want to catch a continuation, right? Now those traders do not know that there is actually a key level, and of course, because of the way the market has aggressively been moving, now if you look at this now, it has taken out this channel that market has been using to sell. So normally a trend line breakout, we should go and take out this liquidity at the top. So whoever caught a beautiful buy trade from this region would be waiting for this guy to be taken out. But the trader who has seen that, oh, there's a key level at this area, would be careful, right? It will give you an edge because you know that this particular level now, market gas breaks this level before taking out this trend line, right? Then all of a sudden you're on your buy trade, market buys, it taps into this level, there's no even good supply zone to sell the market, then all of a sudden market sold, started selling. Right now, someone that has seen the key level there would understand that, oh, the reason why market is not even going back to take out, though it has broken out of the bearish trend line here, it's not even going out to take out the liquidity on that trend line, is because of there is a supply key level here that is resisting market to move higher. Right, so what does that tell you? It now gives you an edge to now know what is even happening. So at the point you just see this, right, most traders will want to say, oh, there's an imbalance here, let's catch buys. They enter buy and they are targeting liquidity above this region, right? Then all of a sudden the market does not take it out, market now reverse and start selling, and you're wondering, and you see most people will they'll start looking for buys at any demand zone. Then all of a sudden the market will take them out till market gets to that particular key level, right? So who is smart now, that's known that there's a key level here, would see this second move and would see this as a shift. Then you'll be catching buys using what? Order flows to catch buys. Look at this one. Market came back to the order flow. You'll be catching, sorry, not buys, this sell, right? Sell, imbalance, sell again, all the way to that region, right? So that's the beauty. But of course, it's not easy to spot, like I said, but with much studying, you groom your eyes to be able to see it. But it definitely helps. It definitely helps. Instead of blindly catching SMC setups, then it will just be moving, get to a region and flips back. You'll be wondering, the setup is good, why is that liquidity not taken out? It's because there's actually a key level that is resisting price from that region. Okay, that'll be all for today, guys. See you on the next one. Yeah.